So we're over now to current assets. Current assets. These are assets that the business intends to turn into cash. All right. So these are assets the business has or acquires them, but they intend to turn these assets into cash if these assets aren't already cash. Now we're going to start with the assets that are already cash. These assets, the business do not have to turn them into cash because they are already cash. So let's start with these. Bank is basically cash, and so is cash. So current assets are assets that the business intends to turn into cash if they are not already cash. So intends to turn into cash. If they aren't already cash. Alright? And we're going to talk about these assets. Now the first example, well, we did give bank and cash. However, the first other example we're going to look at is inventory. Inventory, aka stock, aka merchandise, etc. Alright? So do you agree that the business intends to turn inventory or stock into cash? Of course you agree. No business wants to keep stock in hand for a very long period of time. It means that the business is not doing well. No, inventory is a current asset because this is an asset that the business acquires with the intention of turning it into cash, meaning selling it. Alright, so that's our first example. Then let us look at debtors. Well, accounts receivable. Accounts receivable. Now, what do we mean by accounts receivable? Accounts receivable relates to people that we sell goods to on credit. So it means that they owe us money. So it's not the persons who are our assets, but it's the amount of money that they owe us, which is our assets, which is our asset. All right. Now the amount of money that these people owe us, we really intend to collect it from them, right? And we don't intend for them to owe us for a very long period of time, which is why they do not qualify under the category of non-current assets. But we intend to turn these into cash. We want them to pay us as quickly as possible, and that is why accounts receivable qualifies as a current asset. Current asset, right? So these are the examples of current asset that we're going to look at for now. There are other examples, but we'll look at those when we get to adjustments to our income statement and balance sheet. So let's do a quick recap. Assets, current assets, are resources that the business intends to turn into cash if they aren't already cash. All right, so we looked at bank cash, inventory, which is our stock that we really much would like to sell, and accounts receivable, people who owe us money because we've sold them goods on credit, and the amount of money they owe us, we really want to turn that into cash. We don't want them to owe us for a very long period of time, as opposed to non-current assets, which we acquire in our business to use over a period of their useful life. And that is it for assets. You may see the liabilities lecture to review or take a look at what liabilities are. And for the end of this lecture, I'm just going to quickly bring up the equation we're looking at. Assets are equal to capital, aka owner's equity, plus liabilities. See you in the next lecture. Toodles!